Ladies and gentlemen, Joshua Salvetti, and welcome back to another lesson of the High Performance Trader. And today I really want to break down how becoming the best loser is critical for you to becoming a consistently profitable trader in the market, right? So everybody knows I dive very deep into the whole market psychology, the more psychological aspect of price action and trading, and how that's going to help you become a way more consistent trader in the market, right? So our job is to reduce the vulnerability, right, in the fear of trading, right? I got a new mini course coming out. It's called Trading Without Fear. And the reason why that's so critical and important is because when you're approaching the market in a fearful manner, meaning you're afraid of losing money, you're not accepting the risk, right? And you're depending on a single trade to go in your favor, you're going to lose all that information you've worked so hard to acquire on, right? Your brain cannot function properly when you're in a state of fear, right? It's just how we're wired. Now, to become a consistently profitable trader, meaning we are extracting money on a consistent basis, a weekly, monthly basis, right? Not every trade basis, but over a month, over 100 trades, we are making money, right? To do this, we must approach the market in a faithful aspect, right? An equanimity aspect, meaning mental calmness, serenity, right? All of you have heard the serenity prayer. God grant me the wisdom to accept the things I cannot change, price action, right? We can't control that. Courage to change the things I can, meaning stop losses, getting out of losing trades, adding to winning trades, right? Not just taking profits, and the wisdom to know the difference, right? I love that prayer because it literally and directly and entirely relates to trading. We can't control price action. We can't control if a trade goes our way, right? What we can control is our behaviors to the market information. Now, to control these behaviors, we must control our perception of it. To control our perception of market information, we must be able to stop out of trades immediately. Because if we're not stopping out immediately and we're not accepting the risk, that means we are viewing the market information from a fearful state of mind. Now, every time you're looking at this market in a state of fear, you're going to lose. You're going to create your fearful reality. You're going to subconsciously make your dreams come true. And what you're dreaming of is fear. So it's very important. And I'm going to explain to you and give you examples in this lesson of why you must trade with faith instead of fear, conviction instead of anxiousness, right? Anxiety. So before we go any further, guys, if you want to get involved with our team, the High Performance Trader, hit the links below. I've put everything on the Discord, right? The mini courses, Trader Bootcamp, Market Philosophy, right? Any mini course that's going to come out is going to be on the Discord, right? Super valuable, right? This is a team where any trader, beginner, experience, doesn't matter, can come and learn a great deal of how to become consistently profitable, right? We identify and adapt to market conditions every single day. That is what we call our edge. That is how we define a higher probable setup, is by understanding that we cannot move price action. The banks do. So our job is to understand what the banks are doing. We do this through identifying critical levels and looking at what price action does in these levels, right? We let the market paint her picture and then we trade accordingly, right? This is how we take great risk reward setups, which are critical for you to become consistent. And this is how we extract money on a consistent basis, getting in and out of the market based on market conditions, and we adapt, right? So if you want to learn more about that, hit the links below. Like I said, Trader Bootcamp, 11 mini courses, market psychology or philosophy, right? That's about 5 mini courses, really fleshing out our edge and how we do that, right? That's market concepts, strategies, trading metrics, which is a very simple way for you to log and recreate your winning trades, right? So for you to become consistent, you must learn to measure yourself, right? And a lot of traders, especially new traders, don't know what to even measure, what to look for, right? And a lot of people think it's P&L, and in reality, it's your ability to identify a trade plan and stick to your process, right? So I paint a very simple picture and I show everybody how I do it through trading metrics and very simple. And then we dive very deep into market psychology, trader accountability, creating structure in an unstructured environment, and self-limiting and defeating beliefs, right? So guys, hit the link below, get involved, super valuable resource. All right, so let's break into the lesson. So the first thing I want to talk about before we go any further is position size, right? Think about poker. Once again, if you're playing poker and a dealer gives you two cards, right? You look down, you got pocket aces. Okay, that's good. Does that mean you're going to win? Absolutely not. That gives you a higher probability of winning. So you're able to throw the money out, right? The first buy-in, right? Buying into the hand, accepting the risk, right? You're accepting, hey, I'm going to throw 50 into this pot just to play. That is how you must identify trading. When I see my edge, I go, okay, I'm going to throw 10 contracts in this just to play, right? Now, you get an ace on the flop, right? Boom. Now, I'm going to add to my position, right? Because now the probability of me winning has just gone higher, right? Same thing with trading. I identify my edge, right? Right here, I throw 10 contracts in just to play. And then once we break a critical level or hold or break structure or whatever it is, adding to my, increasing the probability of my setup, I then buy another 10. That is how you must approach the market, right? You can't just buy 10 contracts one trade, buy 20 contracts the next trade, then buy 3 contracts, because the trade that's only got 3 contracts is going to end up being your winning trade, and that's not going to make up for all the loss you took on your other trades. So a key and critical component to consistency is behaving consistently. And what that means is approaching every trade with the same amount of trade or contracts. You can't be fluctuating this number. It's going to cause confusion and it's going to mess up everything. So I used to struggle with this very, very hard. Guys, just buy. I don't care if it's one contract every trade. Just buy one contract and then add to your position, right? It's very important. It is critical to your consistency. Because if you take 3 trades, 2 of them are losers and one's a winner, and they're not all the same position size, it's you're not going to make money, right? So another thing you must do, right, and we said a little bit earlier, is accept the risk. So this is the example. Friday, September 1st, 2023, I identified previous day high at 452.87, right? One of my critical levels, previous day high. Now, this is the highest price from the previous day. Then I got end of day down here at 450.32, and then I had a supply zone or my target up here at 455.50. So we hold above previous day high right here. Now, this is a candle closing above it. This is a high probability setup to me. You know why? Because my risk, I'm literally only risking here. Let me grab the long position. I'm only risking 15 cents to make a potential $3 move to the upside, right? This is what you call a great risk reward setup, right? So I'm literally entering the position here. My stop loss is 15 cents below my entry. I'm willing to, hey, throw that 10 contracts in there, see if this plays out, right? I'm buying into the hand in a probabilistic manner and fashion, right? Boom, trade goes against me. I'm stomped out. Now, the hard stop is so critical, right? Because the Band-Aid's ripped off, I'm on to the next trade. I'm not holding on going, oh my God, please help price turn around, right? Once again, I'm accepting the things I can change, right? Or I cannot change. I'm accepting the fact that I can't control price action and it has gone against me. The courage to change the things I can, meaning I'm accepting that risk. I'm stomping out of the trade immediately, on to the next. Now, what this does is not only protects you from vulnerability, blowing up your account, right? But it now transform my mind to accept the information from the market properly, right? Because there's two scenarios here. If you hold on to your trade, you're going to constantly hope that this trade comes back. Now you're approaching the market in a fearful state of mind. Once again, if fear is present, faith is not. Now, if faith isn't present, your brain isn't going to creatively take the market information and go, hey, all that knowledge I've accumulated, right, through Josh's course, through the YouTube videos, through all the books you've read, whatever it is, you're not going to understand market information properly, right? Now, back to how I traded this day, I was stopped out immediately. So I was able to go, hey, we just ripped right back into this critical level. Now, the way my edge works is we identify and we adapt. So once sellers broke through this critical level at 452.85, that's telling me sellers are in control of that level, right? Buyers weren't. Buyers tried, and then price sold off, sold through. Now everyone knows how much I love the break and retest. If we can get a retest in this level, I'm looking for shorts targeting end of day. So price literally rallied right up to 452.85, and we get that little nice red rejection candle, right? Now, this is where I'm like, okay, I'm willing to put on risk here. Once again, I'm willing to buy 10 contracts, see how this plays out, right? My stop loss is above this closing price of the open candle, right? Not going to get into it, but the opening candle is a very critical level that you must watch each and every single day. Notice we're letting price rip right into that open candle at 452.90. Now, if buyers defended this, I would have looked to play long, but they didn't. Sellers did. Once again, I'm identifying that through price action, and now I'm adapting to that scenario by putting on a short, putting on risk, accepting the risk. My stop loss is once again 25 cents away from my entry. Let's let this play out. Now, I had my eye on this gap fill all the way down to end of day, right? Market loves to fill gaps. So that was my entry. Price began to sell off, right? We broke structure, which is critical. Let me whip out the 1 minute. TradingView does not have the 2 minute, and I don't like that, but right now I think our swim is down, so we must identify and adapt to the scenario. Okay, so how this works here is structures being created on the way up, right? This is what we call a structure. So structures being created on the way up, we literally rip right into our area of value, which was previous day high and is the open, right? So this is exactly what our trade setup looks like. And now, boom, structure breaks right here, right? This is what we want to see through an area of value. My entry on this trade is right at this green candle, right? This little guy right here with the top wick. And my stop loss is right up here, right? So once again, and I'm targeting end of day, right? So let's just pull out our little short position. This is what our trade looks like. Targeting end of day, my stop loss up there. Now we let this play out. Now once price revisits this structure right here and reverses, I'm pretty much like, okay, this is good, higher probability setup. Where can I add to this position, right? Now we got end of day down here at 450.27, and we have low of day, which was 451.23. Now, if we had a very strong buyer there, you can see he showed up once, twice. Now, if sellers can break through this area, I'm looking to add to my position targeting end of day. Once again, I'm getting that. That is what I'm identifying as the ace on the flop. If the ace on the flop can come out, I'm looking to add to this position. Once again, if we couldn't stop out of our earlier trade, our brain would never would have been thinking this way, right? But we did. So now price breaks through low of day. Look at this break and retest. Perfect. Comes up for the retest. This is when we add to the position. targeting end of day. And look at that. Add to the position right there. And look, it didn't go our way perfectly, but it never broke structure to the way up. Now notice here, instead of entering up here in a fearful state of mind, just taking our profits at 100%, right? Because we hit 100%. No, we're letting price action tell us who is in control, and we are adapting to that information, right? We're not just going, oh, here's a winning setup from high to low, right? No, I would have took this all the way down to 0 if it kept breaking structure or breaking retesting all the way to the downside, right? So price comes up, perfect retest. And at this point, we're just bringing our stop loss down, right? We're just keep bringing our stop loss down to the spot I want to see hold, right? Breaks, then really starts to sell off, breaks through end of day, comes right into a previous demand. Now, I don't get out of this trade until right here. Now, why? Because that's where it finally broke structure. That's it, ladies and gentlemen. Absolutely crushed it. Great trade from being able to identify and adapt to market conditions. But more importantly, the greatest part about this trade was the fact that I was able to stomp out of the previous trade so early, leaving me in a state of equanimity, right? Mental calmness, right? Go look that word up. It's phenomenal. Equanimity. Remaining in a mental state of calmness, not fearfulness, but faith, right? And the serenity prayer, right? God, grant me the serenity to accept the things I cannot change, right? We cannot control price action. The courage to change the things we can. We can control our behaviors. We can control where we get in and out of trades and where we stop out. And the wisdom to know the difference, right? I'm Joshua Salvetti. If you want to get involved with the team, smash the link below. Guys, hit the like button, drop a comment, subscribe for more content. I will see you in the next lesson.